Did you know that a single mistake when investing in ETFs could cost you thousands of dollars in 2025? Today, we're going to explore the most common errors investors make when choosing ETFs. This will help you protect your money and maximize your gains. ETFs are an incredible tool for diversifying your portfolio. However, without care, they can turn into a headache. Let's dive into this together, step by step, with clear examples, so you feel confident when investing. First, let's talk about choosing ETFs without researching what's inside them. Many investors see a trendy ETF, like one focused on artificial intelligence, and buy it without checking its composition. For example, imagine you buy the Global X Robotics and AI ETF because it's booming, but you don't know it includes companies with high debt or low profitability. Take a moment. Have you ever checked the top holdings of your ETFs? The solution is simple but requires a bit of effort. Before investing, review the top 10 or 20 companies in the ETF on its official website or platforms like Morningstar. If you see unfamiliar names or companies with weak fundamentals, you might be taking an unnecessary risk. Reflect. Are you investing in a sector you truly understand? This small step can save you from costly surprises. Another common mistake is ignoring the costs of ETFs. Every ETF has an expense ratio, a percentage you pay annually for the fund's management. For example, an ETF with a 0.7% expense ratio sounds low, but if you invest $10,000, that's $70 a year, and over 10 years, more than $700. Is it worth paying that much for a fund that barely outperforms the market? Always compare costs between similar ETFs. For example, the Vanguard S&P 500 ETF, VOO, has an expense ratio of just 0.03%, while other index funds might charge 0.5% or more. Look for low-cost options, especially if you plan to hold your investment long-term. Think, how much are you willing to pay for your money's management? Choosing low-cost ETFs can significantly boost your returns over time. Another stumble is chasing trendy ETFs without understanding their cycle. In 2025, sectors like clean energy or artificial intelligence are on everyone's lips on social media. But buying an ETF just because it's rising, like the Invesco Solar ETF, TAN, can be risky if the sector is overvalued. Have you ever been swept up by the excitement on social media? The key here is to research the sector's context. Check if the companies in the ETF have solid earnings or if they're inflated by speculation. For example, in 2021, many tech ETFs crashed after an initial boom because their prices were unsustainable. Reflect. Are you buying at the peak or at a real opportunity? A little research can help you avoid jumping in at the wrong time. Not diversifying enough is another mistake I see all the time. Some investors put all their money into a single ETF, like one in technology, thinking that's diversification. But if that sector falls, like crypto ETFs did in 2022, your portfolio suffers. Do you have all your eggs in one basket? The solution is to combine ETFs from different sectors and asset classes. For example, you could have 50% in an S&P 500 ETF, 30% in a bond ETF like the iShares Core US Aggregate Bond, AGG, and 20% in an emerging markets ETF. This reduces risk without complicating your life. Think, is your portfolio ready for a storm in one sector? Diversification is your safety net against unexpected market drops. Lastly, many investors forget to rebalance their portfolio. Say your tech ETF grew so much that it now represents 70% of your portfolio, even though you planned for just 50%. If that sector crashes, the impact will be much bigger than you expected. When was the last time you checked your asset allocation? Rebalancing is about adjusting your portfolio to return to your original percentages. For example, sell some of your tech ETF and buy more of the bond ETF to balance things out. Do this once or twice a year, and your risk will stay under control. Reflect. Are you letting one sector dominate your portfolio? Regular rebalancing keeps your investments aligned with your goals. Avoiding these mistakes isn't complicated, but it requires attention and discipline. Review what you're buying, control costs, don't blindly follow trends, diversify well, and rebalance regularly. If this reflection on improving your ETF investments resonated with you, I'd love to hear your thoughts in the comments. Subscribe and give a like to keep exploring together how to grow your wealth in 2025. Investing in ETFs is a great opportunity, but only if you do it wisely. Every decision counts, and avoiding these mistakes brings you one step closer to your financial goals. Which of these errors have you made or plan to avoid? Share your experience below, and I'll see you in the next video to keep building your financial future.